Liberty Media Corporation is an American mass media controlled by company chairman John C. Malone, who owns a majority of the voting shares. History: the 1990s, Liberty Media began in 1991 as a spin-off of TCI, an American cable television group. Peter Barton, hired by TCI's Malone, served as president until retiring in April 1997 to start an investment firm and spend time with his family. The company took over TCI assets considered to have little value, but Barton completed a deal every 10 days for 6 years, and made the company a big success. Liberty was merged back into TCI in the mid-1990s. On March 13, 1998, Liberty Media Group and TCI Group announced the merger of Encore and STARZ into a single company, Encore Media Group, owned by Liberty. Encore was taking advantage of the growth of digital cable, while TCI, which had previously owned 20% of Encore, was more interested in traditional cable. After U.S. Department of Justice approval that required TCI to sell its 23.5% interest in Sprint Corporation plc, TCI merged with AT&T on March 9, 1999 for approximately $48 billion. Liberty Media merged with TCI Ventures Group LLC, TCI's telephone and internet businesses, and the resulting company became part of AT&T, giving Liberty Media $5.5 billion for use to repurchase stock or buy other companies. Liberty Media also could borrow $6 billion without lowering AT&T's debt rating. AT&T bought the other TCI businesses, At Home Corporation, National Digital Television Center and Western Teal Communications Incorporated Euro for $2.5 billion in cash. TCI chairman Malone, who became head of the new company, said buyers would not want all of TCI, but they would be interested in Liberty Media. Malone wanted to start a finance unit similar to GE Capital, which could start new cable or internet services. TCI had already planned digital cable set-top boxes. On September 28, 1998, Liberty Media announced the formation of Liberty Interactive, a company which would take advantage of new technologies such as set-top boxes to develop interactive programming. The company would own 86% of TCI Music Incorporated as of January 1, 1999. Entertainment President and Chief Executive Officer Lee Masters would become the new company's CEO, and Bruce Ravenel would be Chief Technology Officer. On September 10, 1999, Liberty Media Group renamed TCI Music to Liberty Digital Incorporated, with the new company trading on Nasdaq's national market tier, after Liberty Media traded most of its internet content, interactive television assets, and rights to provide AT&T's cable systems with interactive services, plus cash and notes valued at $150 million, for TCI Music stock. Masters, who became Liberty Digital's CEO, told the Wall Street Journal that the new company had a value of $1 billion, $650 million of that from the interactive unit of Liberty Media, which had also used the name Liberty Digital. Liberty Digital lost $244 million with revenue of $66 million in 1999, thanks to investments in struggling internet businesses HomeGrocer.com, Drugstore.com, TiVo and iVillage. The company bought half of the Game Show Network because of its interactive features. On December 17, 1999, TCI Satellite Entertainment Incorporated, based in Englewood, Colorado, announced that Liberty Media was trading its interest in Sprint PCS for $300 million in TCI Satellite preferred stock. A new company, 90% owned by Liberty Media and 10% owned by TCI Satellite, would combine the satellite-related businesses and take advantage of the growing area of Internet content. Liberty Media President and CEO Robert A. Bennett said the deal would benefit stockholders of both companies. Another new company was Liberty Livewire, formed from Todd Ayo and two other companies by Liberty Media, which provided audio and video post-production services. David Beddoe of TCI became CEO. The 2000s, Liberty Media's Discovery Channel, News Corporation and QVC continued to do well, but the company's newer projects had problems, and the company's stock price dropped by half. Malone no longer had the Malone halo he once did. If AT&T agreed to spin off Liberty Media, new deals such as a possible News Corporation purchase of DirecTV would be easier because AT&T would no longer require federal approval to complete such deals. Liberty Media was spun off from AT&T on August 10, 2001. This was one of three possible actions to ensure federal approval of AT&T's $54 billion acquisition of Media One Group. The others were selling its 25.5% share of Time Warner Entertainment and dropping 11.8 million cable customers. Also in 2001, Liberty Media acquired the remainder of Liberty Digital and Liberty Satellite and Technology. Both companies were independent spin-offs of TCI, though Liberty already owned 90% of both companies after the exchange for Sprint PCS stock. Being independent increased their asset values, but the stock prices of both dropped, negating any benefits. Liberty Media subsequently spent $5 billion on 9 German regional cable networks. Apart from television distribution, it holds major interests in other groups. For example, it was the largest shareholder in News Corporation, and had a 4% stake in Time Warner. As of December 2003, it had never paid a dividend. In June 2005, Liberty Media International combined with United Global.com, creating Liberty Global. In May 2006, Time Warner acquired Liberty Media's 50% stake in Court TV for $735 million. On May 16, 2006, IDT sold its IDT Entertainment division to Liberty Media for all of Liberty Media's interests in IDT, $186 million in cash and the assumption of existing indebtedness. IDT Entertainment's assets and States Entertainment Group's line of premium television channels will combine to produce content for all distribution platforms. Liberty negotiated an asset swap with News Corporation and Time Warner that would give it control of DirecTV and the Atlanta Braves baseball team. On February 12, 2007, the deal was completed with Time Warner, wherein Liberty would receive the Atlanta Braves, a group of craft magazines, and $1 billion in cash in exchange for 60 million shares of Time Warner stock. The deal was approved by Major League Baseball and then completed on May 16, 2007. On February 20, 2008, the Federal Communications Commission approved the exchange of 16.3% of News Corporation for 38.4% of DirecTV, an $11 billion deal that also gave Liberty sports networks in Denver, Pittsburgh and Seattle plus $550 million in cash. In April 2007, Liberty completed a purchase of Green Bay, Wisconsin, television station WFAV-TV, and satellite station WJMN-TV in Escanaba, Michigan, which serves the Marquette, Michigan, market. The deal was part of a swap of 7.59 million shares of common stock in CBS, the station's owner, that was held by Liberty Media. In exchange for the stock, CBS gave Liberty the stations and $170 million in cash. Liberty announced plans in April 2011 to sell WFAV and WJMN to Nexstar Broadcasting Group for $20 million. The stations were the only over-the-air broadcast properties in Liberty's portfolio. On February 17, 2009, Liberty announced that it would invest up to $530 million into the struggling SiriusXM Radio Incorporated, in a structured deal that would help the satellite radio provider avoid filing bankruptcy protection by meeting its obligations. The deal also provided for 2 board seats for Liberty Media, and provided cash for operations and development, with a maturity date of December 2012 for the loan. On March 6, the 2 companies approved the second part of the deal, with SiriusXM getting $250 million immediately and Liberty receiving 12.5 million shares of preferred stock convertible into a 40% ownership of SiriusXM common stock. The 2010s, on the Fortune 500 list 2011, Liberty Media was ranked 224, moving up from 2010 when they were ranked 227. In May 2011, Liberty announced it was in talks to buy the Barnes & Noble bookstore chain for $1.02 billion. It eventually bought a 16% stake in the form of preferred stock in Barnes & Noble for $204 million. On August 8, 2012, Liberty Media announced that it would spin off Sterz into a separate publicly traded company. The spin-off of Sterz Incorporated was completed on January 15, 2013. The company agreed in March 2013 to pay $2.62 billion for 27.3% of Charter Communications from Apollo Management, Oaktree Capital Management and Crestview Partners, with the provision that Liberty would not increase its stake past 35% until after January 2016, but no more than 39.99%. By May 1, Liberty completed the transaction and placed 4 directors on Charter's board. Divisions: Liberty Capital. Former assets: Court. This was a 50% stake with Time Warner, which bought the other 50% of Court TV on May 12, 2006, for $735 million. 2 CBS affiliates: WFOV-TV, in Green Bay, Wisconsin, and its semi-satellite, WJMN-TV, in Escanaba, Michigan, Sterz Media. The Weinstein Company, spun off as Sterz Incorporated on January 15, 2013. Direct Sports Networks, owners of FSN Pittsburgh, FSN Rocky Mountain, FSN Utah, and FSN Northwest, Liberty's 48% interest in DirecTV, Liberty's 50% interest in GSN, Fun Technologies, including Fanball, Overture Films, Sterz Entertainment. On September 3, 2008, Liberty Media decided to initiate the process of spinning off Liberty Entertainment to Liberty Media shareholders, leaving Malone with a majority ownership of the new company. On May 4, 2009, the DirecTV Group Incorporated said it would become a part of Liberty's entertainment unit, part of which would then be spun off as a separate company called DirecTV. The new company would also acquire Liberty's 100% interests in the 3 FSN networks and its 50% interest in GSN. The rest of the unit would be traded as Liberty Sterz. Liberty would increase its share of DirecTV from 48 to 54%, with Malone and his family owning 24%. On May 4, 2009, Liberty announced that it was split off Liberty Entertainment, Incorporated, a subsidiary of Liberty owning the 3 FNC channels acquired under the swap with News Corporation and Liberty's 65% interest in GSN, into a separate company that would merge with the DirecTV Group, reducing Liberty owner John Malone's stake in DirecTV to 24%. The merger was completed on November 19, 2009, with the DirecTV Group and Liberty Entertainment becoming subsidiaries of a new company named DirecTV. On June 16, 2010, Malone exchanged his preferred stock in DirecTV with equivalent amounts of common stock, reducing his voting interest in the company from 24% to 3%, with Malone resigning as chairman and ending his managerial role at DirecTV. Liberty Interactive Group and Liberty's interests in other assets. Liberty Media is a prominent investor. In addition to its own offerings, the company also owns the stock of several major media and telecommunication companies. As of December 22, 2013, Liberty has a stake in the following companies not listed above. See also: List of Colorado companies. References. External links: libertymedia.com, company's official website.